Tech layoffs. Google lays off 12,000. Meta lets go of this many people. Twitter cuts their employment by 50%. You may think this is an indicator of some sort of recession or end of the world or doom and gloom, but I'm here to really dig down and let you know what this actually is, in my opinion, and what this means for those that maybe have lost their job, and what we can learn from this to make sure that we, who are not in the tech sector, can prepare ourselves for the worst to come, if there is a worst to come. So if you're new to the channel, welcome. This is where we put $100 a week into a tax-free savings account to build a dividend portfolio right in front of your eyes. If you're not new, welcome back. So in recent media news in the past week, we've been hearing tech layoffs. Layoff here, layoff there. This company cuts this many employees. Let's talk about Google, because I'm sure a lot of us invest in these companies, in Google, Apple, Amazon, Facebook, whatever, okay? Is this something that is new? Absolutely not. Layoffs have been around forever, and we can't forget, I know layoffs is the term that everyone's using right now, but we can't forget about the other terms or the other strategies for companies like hiring freezes, furlough. Don't forget about those. Those are also important things to understand when you're investing in companies, when you're looking at these signs as indicators of where we're heading economically. Okay, so let's go back to 2020, 2021. You know, that time of world shutting down, don't know where the world's gonna go. First time ever, unprecedented was the word of the year. And we look at those company numbers. Okay, number of employees employed, going through 2020, 21, we see immense growth in the market. We see companies hiring like crazy, and now we're seeing the reverse happen. Okay, the reason it's happening is because these jobs were kind of supposed to be there, but were not. These companies are going back to where they used to be pre-2020. Okay, and so it's not like it's a bad thing. It's not an indicator that we're heading into a recession. These numbers are actually very small. When you read hundreds of thousands of people getting laid off, you know, this happens on a regular basis. And I'm sure everyone's starting to learn about this stuff, and that's why people talk about it. And it gives us perspective, okay? So these companies like Google, as you know, ChatGPT just made a big, not a big debut, but they've been debuted for quite some time. But it's become like this mainstream thing. And you know about Google going into an emergency meeting about it. A lot of companies are talking about it. AI, artificial intelligence, has been talked about for years and years and years. And that is a struggle. Throughout time, companies have been trying to figure out how to reduce the amount of bodies. And I'm talking like human capital. We've been talking about how to automate things. You automate your finances, you automate your life, you automate almost everything. You automate your payments for Netflix, for your utilities, and so on and so forth. So it's not strange or new that this is happening, okay? The expenditure for human employees is very expensive. You know, you gotta pay taxes, you gotta pay for benefits. I'm not downplaying employment. Employment is great for the economy, of course, and it provides a lifestyle for a lot of people. But as a shareholder, if you are a shareholder of these companies, it's not a bad thing. This reduces your CapEx in the company, which increases the bottom line, which is the net profits, of course, the company brings in, and that means return on capital for the investor. And so what can we learn from these layoffs if it's not as bad as we think? The one thing that I think a lot of people should take away from this is that there's this saying that live below your means. Of course, I don't like that saying, and I only say that because it's the most common saying a lot of people know, is if your means is a Lamborghini, then that's totally unrealistic. I think a better saying is to live within, you know, the saying I wanted to say was spend less than you make, of course. So saving 10% of your income every single month, or however your pay period works, and putting that away as an emergency fund, having at least 2 months, or even 3 or 4 or 5 or 6, depending on what your comfortability is. I'm gonna just say that. Investing 20%, of course, and then the rest using for your needs. Okay, this should be, I hope, a catalyst for people to realize that layoffs do happen, hiring freezes do happen. Now, the gap between someone finding a new job, it used to be 6 months, but I don't think these guys who are getting laid off in tech are having troubles finding new jobs or finding the demand for their expertise or their skill set. I was on Indeed today and Glassdoor looking at the job postings for people that work in tech, so software developers, software engineers, front-end developers, back-end developers, knowing this code language, and so on and so forth. It's still there. The demand is still there. Just these big, top-of-the-line companies, big tech like Google, Facebook, Microsoft, and things like that, they require a certain skill set, okay? And here's another lesson, is that you always want to continue to learn a new skill set to make yourself valuable to the marketplace. What kind of value can you bring to the marketplace determines, the type of income that you're going to make. And when you do that, it makes you very attractive to the employment scene, to these companies, because you have the expertise. The other thing is, so that's another point. The other thing is that typically these guys who come out of tech, who get laid off or quit or get fired, will typically go on and start a new company. The tech industry has a streak, a well-known streak of having entrepreneurs come out of there and creating some sort of new idea, new software, improving on an existing software and creating millions from that. A perfect example is the PayPal Mafia. Those guys worked in tech, came out of it, and look at them all. They're all pretty much serial entrepreneurs at that point. I mean, Elon Musk, as a lot of people know, has done that, created Tesla, goes on to, buys Tesla, changes the company to what it is today, goes and invests in SpaceX, does that, creates a rocket that is reusable. This guy goes on to buy Twitter, cuts the employees by half. That is a different reason. Now, Twitter couldn't be manned by half of the manpower that it has, or woman power, whatever it is, and it can manage, right? It's starting to turn a profit. And these things happen all the time. It's not like this is a unique time that this happens. So are layoffs an indicator of a recession? Not necessarily. It's just happening. They're going back to pre-pandemic times. And with the way the economy is, I'm sure they can use that capital to invest in something that is like AI, artificial intelligence, because that is the thing, the talk of the town. ChatGPT made a huge wave in that currently. And so these make sense, right? And so when you do your due diligence, don't think that every piece of media or every piece of news is the doom and gloom and just run with it. Do your due diligence like you do in your companies. Honestly, as a shareholder of Google, owning shares, I'm not upset that there's layoffs happening. I'm really not. I do feel for those that have lost their jobs, but that is a lesson in itself. At least put some money away for these days, because they do come, right? Hiring freezes are happening across all companies for the most part, and there are budgets, right? Companies do have budgets, and they usually cannot exceed that budget, or else they get in trouble. And so that's pretty much it for the video, guys. I just wanted to throw that out there just so that you guys understand layoffs are not an indicator typically of a recession, and it doesn't direct where we're heading in the economy. And so just keep that in mind. Do your due diligence, make sure to get the facts and understand what is actually going on. But the numbers are really tiny compared to what an actual recession unemployment rate looks like. So don't forget to leave a like and subscribe. Hopefully you liked the video. Have a great week, and we'll see you guys in the next one. Bye.